Market Structure Monday. Tim Quast, good morning. How are we doing, sir? How was your weekend?
Well, good to see you, Spencer. Yeah, it was a good weekend. Thank you. Except for all of California's smoke flooding into the Yampa Valley here in Steamboat Springs. The blessed breezes came along in the afternoon and blew a lot of it out. So we must have some prayers in the Yampa Valley that caused that to happen. But I'll tell you, it's remarkable how much smoke California and Oregon fires are flooding across the Rocky Mountains.
Yeah, that's not a good situation.
Yeah.
What are you watching this morning?
Well, because we're in the corporate analytics business as well, we think about earnings, of course, and there are 1,100 companies yet to report results. A lot of those are biotechs, healthcare, that sort of thing. This is the time of year time of the quarter, I should say, because we've gotten through a fair amount of earnings, when the sell side, so for those of you who don't know the jargon of the capital markets, I'm sure your audience does, you have the buy side, who are the investors who buy things, and you have the sell side like Goldman Sachs and Citigroup and so on, who sell shares to investors, and they support it with information. And so the sell side tends to come out around this time with their big prognostications and expectations. So we're thinking about both those things. How about you guys? What are you thinking about? I think DraftKings is what you're thinking. I caught just a tiny bit of your discussion before I joined. But Spencer,
you mean you didn't start listening at 8?
You didn't say
Tim,
that.
you're backing yourself into a hole now.
Yeah,
Like that.
You didn't say that. You didn't say all the way back to 8 o'clock. You said a couple of minutes, I think. So, no, we're watching. Yeah, the M&A in the gaming space seems to be heating up. We're watching. We've probably had more conversations this morning than normal about the various futures markets, because gold had a bit of a flash crash overnight, and oil's down again, and Bitcoin is up again. So it's one of those weeks. I think we're all still digesting what Friday's jobs number means going forward, right? I don't know if you have any thoughts on that, but I guess the next domino here is, okay, we got a jobs number. It was very, very good. What does that mean for the Fed and what they'll do? And we seem to be in digestion mode.
Well, as Spencer, we think wholly in market structure terms.
Yes.
So that is, what is the supply and demand in the equity market? Wherever that supply is coming from, or where the demand is coming from, that's what we think about. And I was looking at some tech sector data over the weekend, and we measure buying and selling by sector across the whole market. We're data geeks, so we think about all of these things. And it was interesting to me to look at the last 12 days in the tech sector, and 6 of them were net buying days, and 6 of them were net selling days. And so you'd say, that's just a perfect balance of demand. Then I look at supply. So short volume is how we think about supply, and it's up from 44% in the tech sector on average over the trailing 200 days. That is for you traders, and you should think about this. It means that 44% of volume in the tech sector, the composite stocks, is coming from borrowed stock. And it moved up in the last 20 days to 45%. Not a big change, but meaningful. So if you have perfectly balanced demand and supply is increasing, it's not a great sign. There are things to look at from a supply demand perspective where I think there are opportunities, but the market continues to show this characteristic that we've talked about on this program all the way back to April, how there is a slowing demand curve and a rising supply curve. And at some point, that's going to create problems. And so traders have to be aware of those things. If you're just thinking about charts and fundamentals without a comprehension of the supply and demand equation, you're going to get caught out. It's very important to think about that.
So I know you've been talking about that for a while here, but at the same time, every week or something, or maybe every few weeks, I see another headline about all the inflows into like U.S. equity funds, right? That continues to be the leader. There is this clear bias towards specifically U.S. equity ETFs. the flows are good. We're going to have a record year. Probably will set the record for in like another month or two. In terms of like inflows into U.S. equity funds. So I'm trying to square that circle, and it's difficult for me.
So we track ETF creations and redemptions and see the same thing. We updated that data for June over just last week. The data comes out every month, and it'll be delayed a couple of months by from the Investment Company Institute. And we're averaging $560 billion of creations and redemptions in the U.S. market alone among the 2,100 or so ETFs every month. I mean, it's a staggering number. So you would say, how could we have increasing flows but decreasing supply-demand equation?
Please explain this to me.
So everything's relative, right? If you look at the equation so backing up and maybe tying this whole thing back to the dollar and gold and oil and so on, and how this all fits into the supply-demand equation. I love things like Gresham's law, these references to historical concepts. And by the way, if I'm talking about the sell side, I, of course, as you would too, Spencer, I would immediately think of Ezekiel 13 in the Bible, where it says, it's the first thing that comes to your mind, right? Exactly. I mean, woe to you who follow your own spirit and know nothing. And it's the reference to the sell side, of course, in the Bible. Just kidding, people. I'm only kidding.
Watch out, Tim. This shot will turn on you, and it'll turn fast and hard.
Yeah, that's right.
They will be ruthless.
That's right. Anyway, so back to Gresham's law. Gresham's law says, in very simple terms, and we're speaking of supply and demand, that if you increase the supply of money. This isn't exactly how Thomas Gresham talked about it, but he said if you say a gold coin is worth the same as a tin coin, and you put a bunch of tin coins into circulation, everybody will hoard the gold and sell the tin. And the tin will drive up the value of the things that are stores of value. And so you can see that, the principle would be Dutch tulip bulbs, which exploded in value, all the way to cryptocurrencies today. There's a basic concept, but at some point you reach an equilibrium between the good money and the bad money, and things stop rising. So it doesn't matter how much money we pump into the system. At some point, there's going to be a nexus. We're going to reach a nexus, and how will we know? Well, the dollar will rise. No matter how much we try to depreciate the dollar, as risk assets like stocks and art and real estate and so on go up in value, at some point they can't rise anymore. There's no more money to chase them up, and the dollar will begin to rise again in value. And the capacity of the equity market to continue to reflect upside as money flows into it will diminish. And that will only be evident in the supply-demand equation. And let me show you. I mean, I think this is the best way to see it, if I may. So traders, bear with me here, because this all goes back to how do you make money and protect yourself from risk? That's what we want to do. We want to take gains and not chances. That's what I like to say, right? Take gains, not chances.
I like that.
So I'm going to go to the Benzinga PreMarket Prep August 9th portfolio here, but let me back up one step. See this over here? It says broad market sentiment 6.0. This is the measure of supply and demand in the S&P 500. So this is the composite S&P 500 stocks. And so we take all of that data, the 500 components, give or take. It can be variable because there are, there's M&A and new companies are added to it and so on, but roughly. And we want to look at how that chart that will tell us whether if it's above 5, there's more demand than supply. If it's below 5, there's more supply than demand. So let's go back a full year and look at this. This is how we think about the risk in the stock market. So back here, if you go back before March, this is a great chart of waxing and waning supply and demand, where all of that money flooding from the Fed and so on. And by the way, traders, you can go here, marketstructureedge.com, put in a name and email, and you can do this too. You don't need a credit card. So try for 2 weeks. Just use this to help you understand risk in the markets. Look where we are right now. This is where we are. So sentiment has peaked. The demand curve has peaked and has begun to decline. Now let me go back to where I was. So all across here, these peaks, surging demand, and then then people have to rebalance. Indexes will be overweight this thing and have to sell it, and then they're underweight something else. But notice that when we had a weak demand peak right back here in September a year ago, what happened to the market? It corrected. That's why we watch those things. We watch weak demand peaks, and we've had 3 of them running, and yet the market hasn't tipped over. But it's a very important lesson about supply and demand. We then returned to surging demand, and the market recovered. We dipped below that this green line tells us where there's a great entry point. Back above the red line, that's where you take some money off the table. Market bottoms, put more money to work, take some money off the table. This is what you have to do. I'm sorry that you have to do that, but that's the way that the market works. You can't just count on something 6 months from now being a good reflection of what happens today. That's not the way that the market works. So this, Spencer, it's a long-winded answer to your question, is a manifestation of Gresham's law. We are reaching a supply-demand nexus. Unless that changes, and what would change it? We can talk about that. We're going to have trouble in the market, and it doesn't matter how much money the fund flows seem to show coming in. We are going to reach a point where the risk assets cannot continue to increase in value, and then the dollar will rise. And what happens when the dollar rises? The dollar is the denominator for equities, for oil. The only exception might be gold. Because gold precedes dollars. But if you look at that, if the dollar rises, we hit a 4-month high, oil is going to fall and equities could fall. That's the only place where we will look at something other than market structure. The dollar is an important metric. Otherwise, we will look at these supply-demand fluctuations. And so really, for now, going on, what is that, almost 4 months, we have had this pattern where supply and demand are slowly moving toward equilibrium. And a perfectly balanced market will fall because there's always a spread between the bid to buy and the offer to sell, and the bid to buy will always be lower. So if there's a perfect supply and demand balance in the U.S. equity market, it will decline.
I guess all we can do is, in the meantime, is wait and see, and see if this comes to fruition. Because I mean, broadly, it hasn't really yet. Because broadly speaking, I mean, broad markets are at all-time highs. So,
right, there's cause and effect, and they don't arrive in anything in our own lives. We can make bad decisions and realize good things for a period of time. Then the consequences of the bad decisions arrive. And because the market is so massive, remember, it's a $50 trillion market, far and away the largest equity market on the planet. And so the cause and effect fulcrum is separated by some distance. So how does this apply to you as a trader? Well, maybe a way to make this point is to go back to what we talked about a week ago. We talked about Roku, that we look at the supply-demand equation in Roku. Don't buy it. Well, that was right. We talked about the supply-demand equation in GM. I didn't like it. I mean, I thought this was best, right? Denison, I'm surprised you didn't take me to task on this, because I said, okay, so you have rising demand and low supply. Shouldn't the price rise? Well, by the time we got to earnings, the day before earnings, now we have flat demand. That's what this line is telling us, and rising supply. It can change very quickly in an individual stock, but not over the whole market. The consequences over the whole market will take time. It's very difficult to know exactly when something will happen. But we told the users of Edge a week ago that if you looked at the flows of passive money in the market, they were the weakest on July 30, the end of the month, since a year earlier on August 3rd, 2020. And what happened a month after that? Well, the market corrected. I'm not predicting a market correction. I'm trying to illustrate, in answer to your point, Spencer, that there's a cause and an effect, and they're delayed. So if we're waiting, we want to know something before it arrives, which is the point of Edge. You want to know what the supply-demand equation will tell you is coming. And we want to have as much advance notice as we can. No one can know perfectly, but that's how I think about it.
Okay. Well, we'll have to see how this prediction. I don't know if you want to call it that.
Well, let's give your audience one last thing, because
Okay.
if we want to look at, well, where's it best? Quast, if you're telling us everything's horrible, and I'm not, where is there opportunity?
Yeah.
Well, I think there is a place where there is opportunity yet. I think in very short increments, about 10 days. But if we go down here, and what I'm doing is looking at the dashboard, which is like the bridge of your vessel. Look at healthcare. So healthcare has a rising demand curve and a falling supply curve. It's not super strong, but if you were going to look someplace, that would tell me that's a place to look. There are 543 companies, and passive money is the lead investment behavior. Indexes, exchange traded funds, quants. So that tells me with a week to go into options expirations next week, money is still flowing into healthcare. So that's the one place where I would look currently to find opportunities.
Do you think the news flow with Delta is a player there? Do you think that is potentially
could be? It's interesting that you say that, because I have a COVID-19 portfolio that I set up.
Can we see that?
Sure, absolutely. I do want to show you one thing. Notice this: Alnylam, DaVita, maybe Intuitive Surgical. Those are three things where you have a demand number that is above 5 and a trend that is up, and short volumes that are appealing. Those could have gains. And I'm not saying it's going to be a long time, but mathematically, if we're trying to stack the probabilities in our favor, Alnylam, DaVita, Intuitive Surgical are possibilities. So then if we go look at the COVID-19 portfolio, and I think I got, don't laugh, everybody, but I think I got this from Jim Cramer. So it's got 11 companies in it, and notice this. So here again is the demand side. The demand side is above 5, and it has ticked up the past 3 days. Short volume, the supply side is still pretty high, near 50% of trading, but it is declining. Rising demand, falling supply tends to mean that there is opportunity, and that I think is a reflection. There are people betting that this renewed Delta variant, and now there's even what's the next one we're talking about? There's
Lambda.
Yeah,
Lambda.
Yet another variant, and I think we're going to get these. This is the history of coronaviruses, which we've known about since 1967 in human beings, and coronaviruses are very unstable. They're very difficult to vaccinate. That's why we've never developed a successful vaccine for them. They're unstable, but they become the cold. Most of the 1 billion colds that we experience in the US in a normal year come from coronaviruses. So you have to blow your nose and you get a little fever, you get the aches and chills, and then life goes on. And this is where I think this COVID-19 is going to eventually fall.
It'll just weaken itself out. It'll continue to weaken as it continues to. I hope you're right. I hope you're right. I think think that as well. Like, years from now we'll be looking and COVID's around, but it's just a lot weaker strains of it.
I know 20 people right now who are all vaccinated who got the Delta variant, and they're all fine. A bunch of them are youngsters who are out surfing, and they're fine. They're not even taking NyQuil. They're fine. So
vaccines help them.
Right. Exactly, and the human immune system is fabulous. It works really well. So, am I frightened? No, but to answer your question, there is a little bit of betting occurring here. Now, it's not massive, and that tells us something too, Dennis. There's not a big flood into COVID-19, but the supply-demand equation says people are making a little bit of a bull bet on those. So there they are.
All right, Tim Quast joins us every Monday. MarketStructureEdge.com is his platform. You can try it now. Link is in the description. Tim, as always, a pleasure. We'll talk to you again next week.
Sounds good. Have a good one, guys.